Good morning, and welcome to the Canaccord Coffee Break podcast. I'm Jane Parry, the Chief Marketing Officer here at Canaccord Wealth, and I am delighted to be joined today by a special guest star, John Pullar-Strecker. Good morning.
Good morning, Jane.
Morning.
Lovely to be here.
Thank you for coming. And John is a research specialist in our Chief Investment Office. We'll come to some of his specialisms in a little bit. But first of all, John, what is your coffee of choice?
So my coffee of choice in the morning, cappuccino with double espresso shot. A couple of those keeps me going for most of the day.
I think it's going to be a lively podcast today with all that cappuccino inside you. Brilliant. Well, if you're new to the podcast like John, just so you know, this is based on our weekly market review, which we send out to subscribers on a Monday each week. The podcast really is here to help people understand a little bit more about what's going on in the markets, which we think is a good thing because everyone or nearly everyone is dependent on the markets for our financial future, for our retirement plans, to help out our kids or whatever it might be. So I'm kind of here to ask the dumb questions that I think friends, family, clients want to know a little bit more about. It's deliberately aimed to be bite-sized, to demystify and hopefully give people a bit of confidence in their financial future. And also, this is especially for my friend Nick. If you like what you're hearing on the podcast, don't forget to hit follow on Spotify or Apple and you'll never miss an episode. So welcome to this week's coffee break, and grab your coffee, listen in for about the next 10 minutes with me and John. And we are going to talk about all things AI and tech today. John is particularly a research specialist in high growth sectors of the global economy. That includes robotic surgery, information technology, AI, as I've mentioned, also pet diagnostics, which I think you might need to come back onto the podcast to talk to us about in a little bit more detail another time.
Delighted to.
But for today, let's get into the tech stocks. So I saw last week that the top 10 stocks in the US 500 now make up over 40% of that index, which is a really sort of narrow market leadership over there. Can you just tell us a little bit more about what's going on with those stocks? A bit more background.
And just to put that into context, if we look at NVIDIA, Microsoft and Apple, each of those companies individually is valued in terms of market capitalization at least the same level as the entire UK stock market, or indeed the UK's GDP.
Okay, so they're bigger than our whole nation.
They are
each
bigger,
one.
They are bigger, each one.
Okay.
Absolutely.
So they're just three of the top 10.
They're just three of the top 10. Most of those top 10 are technology companies of different types. If we think about Amazon and Apple as being at least partially technology companies, albeit Apple make real things that we use every day.
Yeah. Well, indeed they do. So let's go into talking a little bit more about AI and what's driving that demand for those stocks, but for what those companies actually do and create.
Absolutely. So if we look at, say, Microsoft's latest figures in terms of its cloud computing growth, which is done through, we measured through Azure, or Amazon Web Services, about half of that growth, and this is a company that's growing its cloud business at over 30%, which is huge.
Per annum.
Per annum.
Wow.
Bearing in mind how big it is already.
Yeah.
Growing at over 30%. About half of that growth is directly from artificial intelligence. And the rest of that growth is from general sort of cloud computing, where we're using more data. That data needs to be stored. It needs to be transformed within businesses. So that's the kind of level of growth that we're talking about. And that's one of the reasons why we've seen these share prices move up so rapidly.
And those companies are reinvesting a lot of money back into data centers, or what? Because I saw some amazing numbers last week. They're increasing capital expenditure from $400 billion US dollars to $500 billion US dollars.
Yes.
Sounds huge to me. So what's that money going into?
It's increasing rapidly, and a lot of that money is going into data centers for racks of computers that helps store that data.
Literally the hardware.
That we all use in the hardware, the software that surrounds that, all the cables, the power, the electricity, for us to be able to manipulate all of that information. Because most companies now, most of their data's in the cloud.
Yeah.
It's not physical servers in the businesses. It's out there in the ether. And I think you make a great point, Jane. I mean, if we compare what's going on today versus what some people have talked about in, say, 99, 2000, the Y2K.
Yeah, I was around for that because I am that old. The year 2K.
It was a very, very exciting time. Yeah. And it wasn't a bubble. It was a wave. It was a giant wave because look at everything it left behind. But we had mobile telephony was still new. The internet was still new.
Yeah.
And we had all these computers that needed to be upgraded to move from 2-digit
to a
4-digit world, and people were going out and burying food in the desert because they thought everything was going to collapse. But a lot of that growth was funded from debt, venture capital, and when the applications didn't come out maybe as fast as we'd all sort of hoped, that caused a real hiccup that led to the sector getting hit, very, very hard.
Yeah.
And the difference.
So that was the dot-com bubble that burst.
Yes, exactly.
Yeah.
A giant wave of spending.
Yeah.
This time round, we have companies that have multi-billion dollars in terms of revenues and in the bank, and they are reinvesting that cash into new areas of growth. So they are sort of helping self-sustain. There is investment coming from other areas, but it's much more sustainable on that basis than perhaps it was the last time.
And how do you see that translating into profits down the line? I mean, they're all massively profitable companies anyway, but that's a huge amount of money they're putting in.
Well, they are. And I think what's sort of different if we think about the world in terms of, Heinz baked beans, for example, in factories, and how many beans can each individual household eat, how many tins. It's kind of, it's easier to quantify.
Yeah.
I mean, and how big can Heinz be on that basis? We're dealing with companies that suddenly eat into, and in some cases develop new industries that have no physical, or say fewer physical boundaries. So how fast can they grow?
We have no idea how much demand there's going to be for those services.
Well, we know that demand is increasing in the same way that we know that the jobs that we're doing are changing. And lots of people are using ChatGPT and other sort of chat boxes to help them in their daily chores. I'm sure you are.
Yeah, we do.
As well. But also, if we think about the next big leap, it's going to be into industry, about the industrial Internet of Things, about digital twins, turning real factories, being able to mimic them, as it were, in a digital world, and then move from a digitally designed factory to a real world factory. And the fact that one can test everything within that factory, including perhaps robots, how they work, how they interact with each other, making sure they don't trip up. It makes everything more efficient. So when you come to build the factory, you know how it's going to work. Yeah. And it requires fewer people to be able to do it.
So much more productive.
Much more productive. And it's going to, absolutely. And it's going to help. That's going to be one of the main reasons why industry will reshore to the US. It has to be more efficient because they don't have enough people with those kind of skills. Yeah. So it will be AI, robotics and so on that will drive that growth.
Interesting times.
Fascinating times.
Fascinating.
The biggest changes to the way that we work, think and interact that we've seen. Yeah. And it's incredible.
Yeah. Very exciting. Well, thank you very much. Thank you for your insight today. So I usually sum up what's in my Canaccord takeaway coffee cup at this point. So we've talked about the top 10 companies in the US dominating the market, getting stronger all the time, but well run businesses, seemingly meeting an unlimited demand for cloud computing, for AI requirements, and that's moving into virtual factories and becoming more productive. But little historical precedent for this growth and capital expenditure on this scale. But interestingly, the investment is being funded from the company's own cash flow rather than external venture capitals or issues in the main. Hopefully that makes it more sustainable. And as long as demand for AI capacity, cloud computing revenues continues to grow, all that investment may well be justified this time.
Let's hope so. I mean, the beauty of this business is that we find out exactly what's going to happen. No one can predict it.
Yeah.
Things move in waves. Markets will get overexcited, and then they'll become a little bit too pessimistic. And we will see that the world is going to be very different in 5 to 10 years. We just don't know exactly how it's going to change.
Brilliant. Well, thank you very much. Thank you for your time. Come back and join us again on the podcast.
Yeah, I'd love to. And perhaps we can talk about pet diagnostics or quantum computing.
Or all those other things that I also know absolutely nothing about. I hope you enjoyed today. Thank you. And if anybody's got any feedback, please do drop us an email, coffeebreak@canaccord.com. We'd love to hear from you. Thank you very much.
Investment involves risk. The value of investments and the income from them can go down as well as up, and you may not get back the original amount invested. Past performance is not a reliable indicator of future performance. The information provided is not to be treated as specific advice. It has no regard for the specific investment objectives, financial situation, or needs of any specific person or entity. It is accurate at the time of recording and is subject to change.